Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's August 29th, just after noon Central Time. And as always, please remember, if you enjoyed this video, make sure you go ahead and give it a thumbs up now so you don't forget. Also subscribe to the channel if you haven't already. That stuff helps me out tremendously. And you can also leave a comment. That'd be great, even if it's just to tell me, hey, I watched the video. Apparently all that stuff is a big deal with YouTube's algorithm. With all that being said, let's jump into the market. Let's talk about what's going on. Let's talk about some of the predictions that I've made in the past, some of the predictions that I'm making for the future, and overall market sentiment. So first things first, let's take a look at the total market cap. And this is something that I've been talking about for the last month or so. Nobody was really talking about it. It was like they were just asleep in their beds or something. Essentially what we've done is we came up and we tested this 38.2 Fibonacci level, and it failed. We came down, found support down around the 23.6, and like I said, it provided support for some time. But as soon as we broke through that, what we actually did was we made a giant M, okay? Right here, down, up, down, okay? That's literally what we did. We just put in a giant double top, essentially. And what we needed to happen, if you were a bull, you wanted this thing to stay above the 23.6 Fibonacci level, which is where this line is right about. Turn the magnet off. This line right about here. Once we closed underneath that, that was a bad sign for the bulls. It also confirmed our head and shoulders yesterday when we closed way down here at $243 billion. So if we take a look at our head and shoulders now, this is a 3-day chart, by the way. So check this out. If we draw our left shoulder, our head, and finally our right shoulder, you can see that we actually did confirm that head and shoulders. Now that has a target, a breakdown target of somewhere around $90 to $95 billion, which is going to be about a 60 to 65% drop if it hits its target. And that's going to be very severe. But I want you to take a look at a couple of things here before you roll out that possibility, because people have been rolling out things I've said for the last 2 months. I can't count the number of trollish comments I've got and private messages I've gotten from people, telling me I'm crazy. Well, I think they're finally starting to see the light that maybe this wasn't, this all-time high rally they were thinking it was. So if we take a look at Bitcoin right now, Bitcoin's sitting right around 9,500 bucks. And if we give it a, let's say, a 60% haircut, that puts it down around 3,800. It's not all that crazy all of a sudden to think that it's going to get down into the 4,200 to 4,300 range and fill the old gap. I'm going to talk about gaps in this video in just a few minutes, so bear with me on that. All right, so that's what we have there. If we take away the target for the head and shoulders and we take away the head and shoulders itself, and we just draw a great big Fibonacci level from December of 2018 to our top in June of 2019, we can see what we've done is actually come down and test this 50 Fibonacci level here, and it's failed, right? We've slipped right underneath it. Of course, this is a 3-day candle. It just opened within the last 24 hours, so a lot can happen. But so far, the 50 fib has failed to hold support, which is a good sign. It's going to go down to the 61.8 fib. And again, I believe it's probably going to go all the way back down to under 100 billion when it's all said and done, which, by the way, will put it right back down in this area at the bottom of the bear market. Now, if you go back and look at a chart of 2015, something very, very similar happens. So let me pull up a chart of 2015. We'll pull up a Bitcoin chart real quick. All right, so this is actually a chart over on Bitstamp. This is Bitcoin US dollars, and you can see that after the bear market, it did make its low down in January 2015. But actually, after having quite a nice rally, and let's measure this move, 100%, so it doubled. Okay, it actually did have a tail come back down and basically retest this bottom. It didn't quite get as low as this tail here, but if you look, it did get as low as this tail here and underneath the close, back in January. So I don't think it's at all, unlikely that we're going to come down and do the very same thing. We could possibly get down to that low 4,000s area. Maybe we get a tail that comes down and tests this 3,200 even. Maybe we test 3,500. I don't think it's at all implausible that we actually do go back into these levels, okay? Because again, we do have a gap that's living right in this area down here, which is all the way down around 4,100 bucks. And that lines up quite nicely with our weekly head and shoulders. So if we draw a head and shoulders on the weekly chart for Bitcoin, I'm going to do this quickly because I've done it in other videos, but essentially we did have this head and shoulders here that has now confirmed with the target down in this area. If you don't like that head and shoulders, if you say, oh, I don't think that's a valid head and shoulders, Okay, let's just ignore the head and shoulders. And of course, it's the same deal with our descending triangle. It has the same target as that head and shoulders would have. Okay, this is a weekly chart and it's on the Bitstamp, so it doesn't quite line up the way I'd like. But essentially, if we go to a 3-day, you can see it a little better there. If we measure that, again, it's going to have that same general area for a target. Copy and paste it over, and boom. Right? See how perfectly that lines up with the bottom of that zone? I don't think that's a surprise at all. All right, so that's kind of what I'm looking at on the big picture. Now, on the shorter time frame, let me show you something real quick. I talked about this in last night's update video. It was a little 5-minute clip. If you didn't catch it, I'll just redo it real quick right here. I actually think that this is very possible, very plausible, that we were actually in a smaller descending triangle that no one was talking about that looked like this, okay? And I think what we've actually done over here is I think we've broken out of that triangle. And if we measure this move here and we copy and paste it over, that's going to give us a target down around $7,400 to $7,450. And again, we can draw a horizontal line. We can see what that lines up with. And we can see that it lines up basically perfectly with this old level of support / resistance. And if we draw our Fibonacci levels from the bottom of this range to the top of this range, so from the very, very bottom in December to the very, very top in June, look, that lines up almost perfectly with the 61.8 Fibonacci level. And in fact, I'm not so sure that this isn't the legit bottom here in January, because this was a little mini correction. And again, now it lines up almost perfectly with that level. So I do expect that we're going to find some support down there. What I don't know and what I'm not sure about is, well, I'm not sure about anything because nothing is guaranteed, but what I'm a little unsure of, right? Less sure of, what do you want to say? I don't know how we're going to act when we get there. I think it's very, very likely that we get a bounce, but how high that bounce goes, number one, I'm not sure, okay? It wouldn't shock me at all to come up and even retest the bottom of this, but I do expect right now, unless something changes, I expect that we're actually going to bounce off of this level, come up on a dead cat bounce, and then continue down to test the 6,000 level, which was historic support all through 2018. And then again, I think we'll bounce off of that. We'll have to watch the market and see, is it going to keep going north, or is it going to go ahead and go south more? And if it starts to go south there, I think that's when we finally get our breakdown, where we come in down in these low $4,000 range. And don't forget that it is completely possible, it's still in the realm of possibilities, that this was not a bull market at all, that this was actually just a bull rally inside of a larger bear market. If we look at the monthly chart, that is completely feasible. You can see this went totally parabolic, and it could be that this was actually A, this was B, and that C is actually going to take us down to a new low. I don't really think that's going to happen at this point. I think the market cap and everything, being down under 100 billion, and I think the alts are going to bleed out more, and et cetera, et cetera. I don't think we're going to go that low on Bitcoin. I still think it's a possibility. I'm certainly not going to put my life savings into it, even at $4,000. I would still be somewhat conservative because you just never know what's going to happen with Bitcoin. But if it did end up falling through there and getting down to $1,300 to $1,800, I would still be buying down at that level, because we do have a gap down here that does need to be filled. You can see it right here between 1356 and looks like right around 1830. Okay, so that would actually wouldn't make me turn into a hater of Bitcoin, where I said Bitcoin was dead. It would just make me think, okay, we finally filled in that gap and now we're going north. Speaking of gaps, I can't count the number of people who have tried to argue with me that gaps do not exist in cryptocurrency, and it's a little annoying. So I'm just going to go ahead and do this one lesson. I've done a couple of videos on this in the past. I'm going to do another one, and hopefully this puts their skepticism to rest and they can start making some money by playing these gaps. Okay. You can Google this yourself. I'm not going to do it right now, but you can Google this. You can go to Investopedia and Google gaps, and it will tell you that gaps in cryptocurrency work just like gaps in Forex. Because the market is open 24/7, they show up as large candles versus actual gaps. So instead of having a blank like you would have in the CME chart, you just have these great big candles, and they can be red candles or they can be green candles. So back in June, when I sold all of my Litecoin, I said, that I was going to be waiting to buy Litecoin back down around the $60 to $70 range. By the way, that's actually changed. This head and shoulders has a pattern down around 40, or a target down around 40, so I'm still waiting. But at the time, I thought it was going to fall to 60 to 70 bucks, and a lot of people thought I was crazy. I got a lot of private messages saying, "Are you sure about this?" And of course, I told those people, "No, I'm not sure. I have no idea." Right? I'm just going by what the chart is saying. It could absolutely go up to $1,000 tomorrow. But if the chart plays out, 60 to 70 bucks is what I'm thinking. Sounded nuts. I know it sounded nuts. It was over a 50% drop in what people were calling, a raging bull market. But the reason that I thought that was two very simple technical analysis pieces, okay? Something that you can learn in 10 minutes. In fact, you can learn it in this video. I drew Fibonacci levels from the bottom to the top. Our golden ratio, which is this golden ratio that I talk about practically every single day, is the 61.8 fib. So for me personally, between 61.8 Fibonacci level and the 78.6, I'm going to be looking for setups to go long, okay? Now that's changed because of this head and shoulders, okay? But I'm still watching it closely. I'm still not ruling out the possibility that I invest in some Litecoin in this area. But that's where I'm going to start looking for setups where I can invest long term, okay? I basically add to my quote-unquote hodl portfolio. I don't do a lot of hodling, but long-term investment, okay? So that was number one. I knew that that zone was between 48 and 70 bucks. But the reason that I said 60 specifically is because we actually had a gap. And that gap lived right here. You can see that we had this candle, this giant green candle form, and price came down and tried to fill in that gap, but it didn't quite get there. So this gap still existed, right? And if we pull this thing way the hell over here, and we zoom in, let's get rid of the Fibonacci levels. If we zoom in, look at this. Here's our gap. Price came up, came down, and I want you to look at where that tail stopped on today's drop. It stopped perfectly inside that gap. It filled the gap. Over here, the gap, there was a high of $62.22. It was on March 18th, 2019. Over here, there was a low of $62.05. So literally 17 cents underneath this old high right here. So now that gap has been filled. But that's the reason that I was calling for $60 to $70 Litecoin, was because of the Fibonacci levels and because that gap needed to be filled. And if you were smart, and you played this, by the way, I was sleeping so I did not, but if you were smart and you had been up, you could have had a bid sitting at $62.22. You would have got a fill right there on this 5-minute tail, which is probably a 1-minute tail if we zoom in. Yes, well, no, not really. It was just there was like a 2-minute window where you could have bought in that area. But basically, if you had a limit order sitting there, you could have got a fill right there. And look at this crazy stuff. Even if you decided you didn't want to hold it and you just wanted to play the bounce, that is a 4.3% bounce within about an hour. And in fact, it was a roughly 3.92% bounce in under 15 minutes, right? Really about 10 to 12 minutes. So if you had just been watching for that gap, bam, right? 3.92%. So, if you're playing with a budget of, $1,000, for example, that's almost 40 bucks, right? In under 10, 15 minutes. $10,000 budget, that's almost 400 bucks in 10, 15 minutes, and so on and so forth. So gaps absolutely do exist. So, when I was saying, hey, this gap on Litecoin needs to fill, I sounded like a madman to a lot of people that don't understand technical analysis or who don't believe in gaps. But now that gap is filled. So remember, I'm saying now, and I've been saying now for 2 months, that Bitcoin has a freaking gap, and it exists down at the $4,200 area. Here it is, right down here. The top of this candle was $4,190. So we have this gap that is living right through here. Okay, that is the freaking gap. So is it possible that we go down there and fill that? It is possible. And yes, I know it sounds a little bit far-fetched. I know it's hard to believe that Bitcoin is going to fall from almost 14,000 down to 4,000. What people are saying is, James, we're in a bull market. There's no way it can fall that far in a bull market. Well, number one, yes, it can fall that far in a bull market. And number two, we don't know that we're in a bull market. Okay, we do not know that for a fact. This could absolutely be a dead cat bounce of a bear market. So keep that in mind. Now I'm going to start hunting for setups to go long on Bitcoin down in the 7,000s, right? And like I talked about in yesterday's video, If it looks like it's a dead cat bounce, I'll get out and I'll try to short it, write it down to 6,000. And if I'll go long again, probably in that area, depends on what's going on. And if it looks like a bounce, then I'll, sell it and I'll short it and just, make money on both sides of the coin. It's not rocket science, folks. Markets go up and down. The best thing you can do is learn to play either side of it. You're not going to be right 100% of the time. You're going to be wrong sometimes. You're going to lose money sometimes. The goal is to make money more than you lose money, right? If you're right half the time, the goal is to make twice as much when you're right as you lose when you're wrong, right? That's basic trading. It's called risk management, right? Risk reward ratios, right? So that's what I'm looking for. I'm looking for a drop down to this level to fill this gap. So that is basically what I'm looking at. I do believe that at this point, this is a confirmed, it's not quite yet a confirmed M. I shouldn't say that. Remember that this has a low right here of 94.67. This middle of this M. Right now price is 95.20, so it's trying to close above it. But if we get a daily close underneath this level of 94.67, this would be a confirmed M right here, and that would be another bearish sign. Okay, I'm not too worried about this being a trap at this point, but it is in the back of my mind. I'm always open to the possibility that this is just one giant trap and this thing is going to still go up. All right, so I'm not going to go in there again. Never going to put my life savings into a short or long position. It's just not going to happen. I'm going to be conservative and use proper risk management so that if I am wrong, I don't get completely blown up on a single trade. With that being said, I think it's pretty safe to say at this point that this was not a symmetrical triangle. Okay, even if we pull this down and draw it like this, in no world was that a symmetrical triangle, which is what I was saying all along. All right, it's completely fallen out the bottom of that. I don't think there's any way you could draw this where this is still a symmetrical triangle. Can we move this down here? Not really. Okay, so let's take a quick look at Litecoin. And here's the thing I'm going to tell you about Litecoin. As much as I'd love to go long on Litecoin at these levels, because again, my average sell price was right around 127. So if I go long right here on Litecoin, I can do one of two things. I can either take a huge 5-figure profit in US dollars, or I can take all the money that I made from selling it, reinvest all that back into Litecoin, and I can basically double my position. So that's very, very tempting. But the problem with Litecoin comes down to this. When I look at the Litecoin Bitcoin chart, okay, this is basically a giant M. And the neckline on this thing is right around 6,828 Satoshis, which right now price is actually underneath that. So if we get a daily close, this is actually a weekly chart, but if we get a daily close even under that level, right, which it looks like we very well may, to me that looks like there's more downside. It looks like it's very possible that this thing is going to keep going down and that we may go back down and retest these levels down here around just under 3,000 Satoshis. Now, the reason that's important is because if I'm accumulating US dollars, right, I know that if Litecoin was due for a bounce against Bitcoin, the US dollar value might go up. But in this case, it looks like Litecoin is poised to continue losing value against Bitcoin. And at the same time, the US dollar chart for Litecoin actually looks to me like it's going to go down to around 40 bucks because that's the head and shoulders target. There's not really a gap down there, this right here. The reason I'm not going to call that a gap is very simple, because we actually had a high over here. And to me, it looks like all this did was come down and test the high. And I think a few months ago, I actually had a gap drawn down there, but for some reason, I missed this right here. I think this was just retesting this. Okay, so I'm not going to call that a gap anymore. But yeah, I do think 40 bucks is a legit level for Litecoin. So right now, I'm nervously waiting to see how that plays out, because I am a Litecoin fan, but I can't invest when I think there's a possibility it's going to drop to 40 bucks. It doesn't sound like a lot. It's 64 right now. So it's like, James, it's only $24. It's over 50%, right? That's the problem. It's over 50%. So if I put in, just as an example, if I put in $1 today, I don't want to lose 50 cents on it before it goes back up. And if we look at the volume profile for Litecoin, we can see that the long-term, volume support is down around 46.72. So, and if we just measure from the top in 2017 until now, again, long-term support is down around 30 bucks, and we have this gap sitting between 72 and like the $40 area. We're actually down right inside this volume bar right here. So we already fell through this level of support, right? A lot of people thought maybe $72 would hold as support. Didn't happen. So it's very possible that we go down here to 38 bucks. Okay. So that's where I'm a buyer right now. If something changes, then obviously I may buy sooner than that, or I may not buy at all. But for right now, I'm looking to grab Litecoin back around 40 bucks. And if it works out that way, I'm going to basically triple the number of Litecoin that I hold. Rather than taking the US dollar profit and saying, okay, I'll just buy back for cheaper, what I'll do is I'll put all the money back into Litecoin and I will triple my position. That's, the way I work. I don't try to accumulate at tops. I'm selling during the distribution phases, or what I consider to be the distribution phases. But when we get back down into the accumulation zones, I'm not trading for US dollars in those zones. I'm going to trade for crypto. So what I mean by that is when we're way up here at the top, right, I'm accumulating US dollars. I'm not trying to accumulate Bitcoin. I'm not trying to accumulate Litecoin or any other coin, period. I am simply trying to make as much US dollars as I can. But when we start getting back down into these zones that I feel are the bottom, my entire strategy changes. Instead of trying to accumulate US dollars, I'm trying to accumulate as much cryptocurrency as I can so that when it makes its next leg up, if it makes its next leg up, I can get very, very wealthy. Okay. Now, if I'm wrong, here's the downside. If I'm wrong and crypto ends up dying or it goes down, I lose all of my gains. Okay. Because I didn't cash any of the US dollars out to the bank, I actually lose those gains. Right. I only cash out enough to live on. That's it. Right. Everything else is going back in, back in, back in. Right. And of course, enough to pay taxes, which, that's part of it. So overall, not a lot has changed. I'm just watching to see how this thing plays out. One key level that you really need to keep an eye on, there's basically two key levels that I'm watching right now. Number one, there's going to be this 94.67 level. I want to watch and see where we close on that. Also, the next level is going to be down around this low, down around $9,050, $9,100. If we get a close under, this one, I think we'll definitely go down to this one. And if we get a close under this, then I think it's just, dead air underneath there. Also, don't forget we have this head and shoulders here that is now trying to confirm. Again, it needs to close under this 94.67 level for that to confirm. But once it does, if it does, that is going to have a target. Let's see, 28.52, somewhere around the mid sixes. Okay, on that target. So just all kinds of bearish stuff. I don't think there's a whole lot the bulls can cling to at this point, but always keep in the back of your mind that anything is possible. So again, don't put yourself in a position where if you go short and you're wrong, that you're going to blow up your trade fund. It's important to use proper risk management, even when the market looks like it's a guaranteed win. It's never a guaranteed win. All right. This is James with Crypto Common Sense. I hope you enjoyed the video. If so, please be sure and give it a thumbs up and subscribe to the channel if you haven't already. Also, don't forget you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my free Facebook group. And always remember that I'm literally some guy sitting in a spare bedroom. Nothing in this video is financial advice. Nothing in this video is trading advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. This is James with Crypto Common Sense. Trade safe.